All right, you're looking at a daily chart of the Nasdaq, and I want you to take a good look at this chart because it's from 2003. Now, history doesn't always repeat, but it often rhymes. I know some people really dislike it when I post these historical charts, but if you look back at history, it could give you a little clue into what's happening in the future. Because in the stock market, the names and the stocks may change, but the patterns do not. And right here, you can see this definitely had, as it came through the 200, it had this cup with handle type of pattern here, then ripped into this power trend, right? And then sliced its 50 and lost the power trend. It stayed down there for about a week, and then it rallied right back above the 50 and got right back into the power trend. Okay. Yeah, I know it pulled back to the 21 a couple of times along the way. But let's take a look at the Nasdaq today, which is the last day of the month, so we can check out monthly charts as well, which I will get into this weekend. But for the sake of today, you can see, as it rallied through the 200, just like in 2003, it formed this, cup with handle pattern. Then it ramped. It did pull back to the 21 a couple of times, but once again, pulls back below the 50 for a week or so. And then now it's starting to get back into this, hopefully, as it drives through the 50 simple moving average, we get back into our power trend, and it needs to, the low of the session needs to be above the 21 for 10 days. So we're only 2 days in, so we got a little bit of time for that. But I just wanted to share that was 2003 versus exactly 20 years ago, 2023. So anyway, that's the Nasdaq today. Had a nice day, up 15 points. You say, oh man, we lost our momentum. Well, because of the jobs report tomorrow, there's caution, taking a little off the table, and we'll see how the jobs report pans out. We're going to celebrate people losing their jobs is what the Fed wants, a looser job market. So a lower number, a weaker number is good news. A stronger job number is bad news. So that's just kind of where we're at right now. Okay, I'm going to do something a little different today. Just kind of go through, just take a random walk, essentially. 52-week highs, stocks that I like, stocks that I own, and stocks on our watch list at MC Stock Charts. So this is Adobe. I would consider this one of the Divine Nine and a big part of the QQQs, the Nasdaq 100. And this one made a new high today. You can see this little base looking a little bit like the Nasdaq here on the pullback, except for it did not breach its 50. It found support at its 50 and is moving higher. So Adobe with a new high today. Google, this one has been on our watch list. It is off our watches because it's a little extended now, but you could see it was set up in a base. This one stayed well above its 50 and made a new high today. So another 52-week high is from Celestica. This is a contract manufacturing stock. And this is why I pay attention to the gaps higher. The criteria is a 10% gap higher with more than 100% above average daily volume. Now, this is only 9.42, but I put it in the list. It's close enough. What I've been seeing a lot of recently on these gaps higher, they have like a short covering move. They make a peak, and then, profit takers come in and they pull back to their 10, and then they resume higher. We've been seeing a lot of that with these earnings gaps, and I'm going to show more of these coming up here. So keep that in mind. You don't want to chase this. You want to wait for the pullback and then let it resume higher. GPOR, you're noticing that a lot of these stocks that I'm showing you are in different sectors. This is an oil and gas stock. This one made a new high today, and you could see, I got to go to the weekly on some of these. It shows it a little better. Huge cup shape pattern, little pullback to the 50, and this one is just a ramped higher. This one is extended, but definitely a strong stock making new highs. We like stocks that make new highs. You definitely have to take note of those. This is Indian based online booking. It's like Airbnb and booking.com or whatever. And this one, you could see the pattern here. Consolidation broke out. Now the last couple of weeks is just pushing away from its base. Once again, this is another move of almost 10% on 264% above average daily volume. And so that one just continued to ramp higher, pulled back to its 10 a couple times, but strong stock. We like strong stocks making new highs. So that's just what I'm doing today, just looking at stocks with new highs. This is not all of them, certainly just ones that I'm pointing out. This is TJX, a retail apparel shoes. This is in the same group as Lululemon, which I'm going to get to in a minute, but you could see the pattern here, cup, handle, break higher. It's up, 4% this week. A nice move here, being supported by the moving averages. So another stock making a new high is ALSN. This group is not good. 154 out of 197. Auto truck. What do they make? Transmissions for hybrids. Anyway, new high today. You can see this is like a flat base, little shelf type pattern. We can see this on the weekly here. Yeah. What is this? 5 weeks tight, and now breaking out of a 5 weeks tight pattern. So sometimes that drives people crazy, like it's not going anywhere. And the other stocks are rallying, but ALSN made a new high today. So I'm going to get into stocks that I like now, that I don't own, but I like. So we went to 52-week high. We're going to go stocks that I like, stocks that I own, and all stocks on the watch list at MC Stock Charts. This is Workday. And I like this stock. When you can obviously see why the breakout. There it is, 10%, 240% above average daily volume. Pull back to the 10. Now it resumes its uptrend, and it's been a pretty common theme. And remember, this is when the Nasdaq was in its downtrend, pulling back to the 50. This one did for 1 day and then ripped higher. So I like Workday. I'm not saying I'm going to buy it here, but I like the stock. This is Eli Lilly. People cry to me that it's overvalued, and it's got a 526 billion market cap. A lot of growth priced in, but once again, we see the gap higher on August 8th, 14.87% on strong volume, finally pulling back to the 10 EMA, but just a really strong stock. I do like Lilly, and since I'm showing Lilly, I got to show NVO. Doing nothing wrong. Gap higher, pull back to the 10, just going sideways. Did pay its dividend. A lot of growth priced in. This is a 417 billion market cap, so about 110 billion less, with about the same amount of revenues. So Lilly is a little more expensive. I'm going to dive into that a little more this weekend about these drug stocks and with the government getting involved and what it might mean. United Rentals is another one that I like. You can see the daily, the cup with the handle, but I want to pull back to the weekly a little bit and see this nice symmetrical base pullback, now moving higher, up 6% this week. United Rentals, I like the stock. It's one of those infrastructure plays. You can't always have all NVIDIAs in your portfolio, so I do like stocks like United Rentals. Another one that I like is SMCI, and actually I made a little small purchase today on SMCI, and I had a couple people ask me, like, where's your first of all, I'm going to stop right there. It's making higher lows, and I've well documented my trade earlier on this one from 90 up to 330 and 350. But I wanted to dig in a little bit more on this one because it made this low here, 235, and now it's starting to make higher lows. Okay, so I bought this one today, and people were asking me, when are you going to check out? What if it dives? I don't buy stocks thinking they're going to die, but you always have to have risk management, and so I would not like it making a low below today's low, which is 264.05. So if it trades below that level, it's adios muchachos. But stocks, I notice it keep knocking up against the 50. Eventually it's going to rally through, and we've seen a lot of stocks rally through their 50 recently, and I would still think that this would have resistance at 300 if it does rally through its 50 simple moving average. So yeah, small in a little 2% position. If it bombs, it bombs. I'll cut it loose. If it does well, I'll probably add if it gets through the 50. So that's my thought process on SMCI. For those who asked me, another one that I like, LSCC, was on our watch list recently. I took it off this week. Had a big, nice move today. I don't know if it made a new high. Yeah, I think it did make a new high. Okay. But still, to me, if you're looking at the weekly, this is still in consolidation. Yeah, flat base pattern. So yeah, LSCC may end up on our watch list next week. But tomorrow's Friday, like I say, the jobs report, 3-day weekend, Labor Day coming up. Not going to get too crazy, just holding positions that are doing well. And since I mentioned that we're going to do 52-week high stocks that I like, stocks that I own, and the watch list stocks, I'm going to get to stocks that I own. This is NVIDIA. Bummer for me that I had held it for a long time, but then sold when it sliced its 50, then it rallied back through. Does that sound familiar? And then went to 500, and then it had earnings, and people got upset because it didn't rally after earnings, but it went from 400 to 500, which is 100 points, 25% move. So it pulled back to its 21, and that's when I bought it, about 450 the other day, Tuesday, maybe Monday or Tuesday. And now it's done well, but I still expect it to have problems here at the 500 level. Real strong stock. Obviously, if the artificial intelligence themed, bull market's going to come to fruition, this is going to have to be the leader. And, time will tell. It could totally bomb. The bears are whining that it's got, the PE of 94 and it's overvalued, but we'll see. A stock is only worth what the market's willing to pay for it. Right now, they're willing to pay $493. So it's moving after hours because of the Broadcom earnings report, which was very good, by the way. Another stock that I own is VRT. This is one that I talked about, on the move higher, it gapped up. First of all, I got to go back because a couple of people that I respect had been pointing this out, and I completely whiffed on it. And and then it pulled back to it's 21, but I couldn't buy it because of earnings. Then it gapped higher on earnings, and I thought, geez, I missed it, right? And then, like I said, this little rally ramping short covering thing to 36. I let it go and watched it come back, and I bought it here around the 21. So around 33. So it's up, roughly 20%. So instead of being up, chasing it and buying at 36 and being up 10%, I waited, bought it at the moving average. Now I'm up 20%. So that's the difference in being patient. And I've handled that one pretty well. So I butcher enough of them. So I got to give myself a pat on the back when I do something right. Anyway, Celsius, another one that, earnings gap or trading sideways while the market's rallying. Earnings gap again, rallies up to 183. So you can't chase it. You wait till it comes back to the 10. And that's where the opportunity is. These strong stocks are not going to set up in bases. Like Celsius is not going to gap higher and then come down and form a little cup with handle base where you can buy it here. They're not going to do that. They're going to trade along their moving averages, and you got to suck it up. And I guess, you'd call it chasing, but for me, you buy them on pullbacks, and you'll see some of these strong stocks, they'll have a couple of days of weakness down to their moving averages, and that's your opportunity to get in. That there's not trading off of bases, they're trading off of pullbacks. So anyway, that's the way I play it. You can do what you like. These are just observations that I'm making. I'm not telling you what to do. I'm not telling anybody what to do because nobody listens anyway. Here's ELF. This is one that I've had for a long, long time. And it's just a real consistent stock, easy to hold, just pulls back every couple of months to its 50. And you can see it's a real, serial gap, or it gaps higher on earnings. This is a gap higher on earnings, 137, been pulled back to 114. But this recent, I believe it was Monday or Tuesday, they made an acquisition that Wall Street really liked. And, I got to be honest, I don't know much about this, cosmetics, personal care, skin care space, but ELF obviously has their sales and earnings growth, which is what attracts me to this stock. Stocks are going to go up because of sales and earnings, not because of the chart. And ELF is a good example. STRL, another infrastructure, data center, construction stock that I like. Once again, I knew about it and I was watching it. A lot of people were talking, not a lot of people, some people that I respect were talking about it. And then it ripped higher after earnings. Once again, like the short covering, pushed it higher up to 83, and you can't chase this move. You got to wait till it pulls back. At least I do. I'm not telling you what to do. This is what I do. Wait for them to come back. A couple of days of weakness, and then you can get them, at $75, $76. And then as it resumes higher, then you start to, your trade starts to pay dividends here. But yeah, I do not like to chase the ramp higher. I like to wait for the pullback. And that takes a little bit of discipline because you're watching the stock go up every day. But you got to know that there's going to be a pullback because there's going to be people taking profits, and that stands to reason, right? Another one that I purchased, oil and gas stock, is PR. It was on our watch list. You can see the consolidation here. I've mentioned this many times, how the stock has the ability to move higher. This is, like I said, an oil and gas U.S. exploration stock. Had a nice cup with handle, pulled back to the 21. We pulled the trigger at 11.50, and now it's 14.18. It's just been going up. I'm surprised how much this one has moved for me. So I'm still holding it. No, I'm not taking profits yet. I'm just going to see what makes of Permian Resources. Anyway, the last group is my watch list that has done really well this week. We had a terrible week last week and turned it around this week. This is MNSO. I believe our buy point here was, let me check my notes here. On this one, it's 21 something, I believe. I took it off because it moved quickly. 21.56, which is right there. Yeah, and it just took off for us. So congrats to the longs there. Not on the watch list any longer because it's moved too much. Same with FSLY. FSLY and MNSO making new highs today. You can see this consolidation here and the move higher. Been up every day this week. So yeah. FSLY's been a winner for us. Google, I mentioned, that was on our watch list as well. NVDA is still on our watch list. Power, another one. PWR, Quanta Services, which I like, above the 206 area. It was up around 212 today, pulled back, at the close. We're going into a 3-day weekend with the jobs report, so caution is warranted. Yeah, it was 212.43, so just a strong stock. And if you just look at the monthly, this thing is just grinding higher, right? The last 4 years. So I do like Quanta. Another one is a COUR, which is kind of an obscure stock. It's in the Duolingo and Spotify space industry group. You could see the cup with handle pattern and pulled back to the 21 recently and now made a new high today. So congrats to the longs there. XPRO is another one that's on our watch list that I like, an oil and gas field services stock, and you can see the consolidation in this one. Also, you can see, its ability to make big moves in the past. Yeah, this one has the ability to move, and now it's consolidated here in this base, trading sideways, had a 3 weeks tight pattern, and I think this is just incubating here in its shell, and it's going to pop out soon enough. You just got to be patient with stuff like this. It's not a screaming fast stock. And COCO is my last one today. I like this stock. I know Celsius is the big winner in the drink space, but there's room for more than one. This is a nice consolidation in the weekly. And then on the daily, I just got to zoom in on this because it's been getting support at the moving averages here, and it's got a little bit above. It was an inside day today, but it got a little bit above that 10, and you need for it to come down to at least that area there, and maybe even the 21 before this one finds support. It's 2% above the 10 EMA, that green line there. So just be patient with that one. It's moving averages are trending higher. It's a slower moving stock. It's trending higher. You just gotta be patient. But I do like it, and it's going to stay on the watch list. It's not an NVIDIA. It's not going to move like SMCI. It's just a slower moving stock. And that's it for today, except for I'm going to honor the great Steve Jobs and say one more thing. Lululemon. Oh, okay. It's up after hours. Last time I looked, it was down a couple percent. They had a phenomenal report this afternoon. Strong earnings, strong revenues, and their inventories are improving, stronger margins than expected. You can see this one traded below the 50, and now it's starting to rally back through, which we've seen a lot of lately. So I would expect this one to challenge 400 here pretty soon. The other one is AVGO. This was in the yeah, they had a strong report. Not a good reaction after hours, and you can see this stock is set up in a consolidating flat base pattern here. So down 3%. We'll see what happens in the coming days. You never know. These, it was up what, 30 today, down 30 after hours. So it was a good report. I would not, I would expect it, eventually to move higher. It's not going to be an all of a sudden, not the instant gratification that we expect. This is MDB, and this one's going to rally through its 50 tomorrow. Strong report, probably going to trade over 400, but still consolidating within a base, so yeah, 439 was the old high. So probably just consolidate for a little bit. It's going to make a nice move tomorrow. It's up nearly 6% after hours. That's it for me today. Thanks for watching. Jobs report tomorrow, Labor Day weekend coming up, and we never give up.